Picture this. A young boy, born in a one-room weaver's cottage in Scotland, moves to America with dreams of a better life. This is the story of Andrew Carnegie, one of the richest men in history. In the early days, Andrew was no stranger to hardship. His family, seeking opportunities, left their homeland for the promising shores of America. Andrew's journey to wealth began humbly, working as a bobbin boy in a cotton factory. But even then, his ambition was clear. Andrew's first big break came when he started working in the railroad industry. With a keen eye for investments, he put his money in bridges and oil derricks, both of which were booming industries at the time. These smart investments were just the beginning, but it was his venture into the steel industry that truly set him apart. With unmatched dedication and strategic thinking, Andrew Carnegie dominated the steel industry, building a business empire that was virtually unchallenged. He became the symbol of the self-made man, embodying the American dream of rags to riches. His life is a testament to the power of ambition, perseverance, and strategic investment. From a bobbin boy to a billionaire, Andrew Carnegie's story is a masterclass in wealth accumulation. By the time of his death, Andrew Carnegie's net worth was an astounding $372 billion in today's money. But how did he achieve such wealth? Let's delve deeper into the world of wealth accumulation. To cap this off, here's a fun fact. Did you know that in addition to his business acumen, Carnegie was also a prominent philanthropist? By the time of his death, he had donated about 90% of his wealth to causes like education and peace. Now that's leaving a legacy. Wealth doesn't just appear out of thin air, it's the result of careful planning, smart investments, and a little bit of luck. Now let's delve the numbers. It's been said that the journey to wealth is less about making a lot and more about saving a lot. Consider this. If you save just $25 a week starting at the age of 20, with an average annual return of 7%, you'd have over $1 million by the time you retire. That's the power of saving early and consistently. But what's the secret sauce that makes this possible? It's called compound interest. In simple terms, it's earning interest on your interest. So if you invest $100 and earn 10% interest, you'll have $110. The next year, you'll earn interest on $110, not just the original 100. Over time, this can lead to exponential growth of your investment. Now, where do you get this magical 7% annual return? Welcome to the stock market, a crucial player in wealth creation. Historically, the S&P 500, a broad measure of U.S. stocks, has delivered an average annual return of about 10%. Of course, there are ups and downs, but over the long term, the trend has been upward. So, let's do some math. If you were to invest $500 a month in a low-cost index fund tracking the S&P 500, assuming an average annual return of 10%, you'd have over $1 million in just under 30 years. But remember, wealth isn't built overnight. It's a result of consistent saving and investing over a long period of time. This requires discipline, patience, and a willingness to weather the storms of market volatility. And it's not just about the numbers. It's about understanding the principles of finance and making them work for you. The numbers don't lie. Building wealth is a marathon, not a sprint. It requires patience, discipline, and a solid understanding of financial principles. Now here's a trivia question to test your understanding. If you start saving $500 per month from the age of 25, with an average annual return of 7%, how much would you have by the time you reach 60? Think about it and see how the principles we discussed apply to this scenario. So what can we learn from Andrew Carnegie and the facts and figures about wealth accumulation? Let's take a step back and review the key points we've discussed. Andrew Carnegie, a man who started with nothing, made his fortune through smart investments and strategic business moves. His story is a testament to the fact that wealth accumulation isn't just for the born rich, but can be achieved by anyone with the right mindset and strategies. One of the most powerful tools at your disposal is early investment. Starting early gives your money the most time to grow. It's not about having large sums to invest, it's about giving your investments the time they need to flourish. Let's not forget the magic of compound interest. This is where your interest earns interest, and then that interest earns interest, and so on. Over time, this compounding effect can turn even modest savings into a substantial sum. Now let's talk about the stock market. It might seem intimidating, but it's one of the most potential-filled places for your money to grow. While it's important to understand the risks, the stock market has historically provided significant returns over the long term. Remember Andrew Carnegie's journey from rags to riches. He exemplifies these principles and shows that wealth accumulation is achievable of your starting point. Wealth accumulation isn't just for the likes of Andrew Carnegie. With the right knowledge and strategies, anyone can build a fortune. Remember, the journey of 1,000 miles begins with a single step. So why wait? Start your journey towards wealth accumulation today. Let these lessons guide you to firmly set your first step towards financial freedom. Act now, your fortune awaits.